This is Nightly Business Report with Tyler Matheson and Susie Guerra. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Turnaround on track. Hewlett-Packard reports a drop in revenue and cuts thousands of jobs. Why and what else is in the earnings report that investors need to watch?
Supersized protests. McDonald's defends its business strategy as thousands of demonstrators chant for higher wages outside its shareholder meeting.
And the $84,000 question. Why are some drug prices so doggone high, and what can and should be done about it? All that and more tonight on Nightly Business Report for Thursday, May 22nd.
Good evening, everyone. A big surprise from Hewlett-Packard today, but not a pleasant one. It accidentally released its second quarter earnings about an hour early while the markets were still open. The report was scheduled to come out after the closing bell. Well, investors were puzzled by the change, disappointed with the results, and the mistake didn't help HP shares either. The world's biggest personal computer maker continues to struggle to stay relevant in a world of mobile devices and cloud storage. So it's no wonder HP announced more job cuts, as much as 16,000, for a total of 50,000 employees getting the axe. As for those earnings, 88 cents a share. That was right in line with analyst estimates. Revenue continued to decline, down for the 11th straight quarter and narrowly missed forecasts. Shares fell slightly in late trading after sliding nearly 2.5% during today's session. Sheila Dharmarajan joins us now with more on Hewlett-Packard's results and the one big takeaway that you see from these numbers. Sheila, over to you.
Yeah, the key takeaway is, Meg Whitman keeps on talking about the fact that the turnaround is still on track, but the bottom line is it still has so much further to go. Pretty much everything we heard in this quarter is the same mantra we've been hearing from HP over and over again. They're cutting jobs, they're cutting costs, they're streamlining their systems. The bottom line is we're also hearing the same thing, that they're cutting down their revenues. Their revenues have not grown. In fact, if you dig into the numbers, every single one of HP's biggest divisions actually lost sales except for one. That's really scary, especially when you think about the enterprise part of the business. Cisco and Oracle, they all raised their sales. HP wasn't able to. That's very troubling. So it really shows that this turnaround is still struggling.
All right. Thank you so much, Sheila, for coming by.
Good to see you, Sheila. All right, stocks ended slightly higher today, with the major averages closing up for the fourth session out of the past 5. Stocks got some help from good news about manufacturing over in China and here at home, and improved earnings from some big retailers like Best Buy and Dollar Tree. And even though first-time jobless claims rose last week, they are still sitting near 7-year lows. At the closing bell, the Dow was up 10 points, the Nasdaq higher by 22, and the S&P up by 4.
Well, far from Wall Street, more than 1,000 fast food workers, union organizers, and other protesters turned up the heat on McDonald's at its annual shareholders meeting. It was held at company headquarters in Oak Brook, Illinois, and it was far from business as usual. Hampton Pearson has more.
The annual McDonald's shareholder meeting has been the target of nationwide protests in support of a $15 an hour minimum wage.
McDonald's should not have to wait on the government to raise minimum wage.
Over 1,000 demonstrators have marched on McDonald's headquarters outside Chicago in the last 2 days, targeting the world's biggest fast food chain as the first step on the road to organizing the entire industry.
These workers are not fighting to raise the minimum wage. They're fighting to sit down with the fast food industry and negotiate a $15 an hour pay rate and to write in a union contract.
Inside the meeting, not all McDonald's shareholders were happy about what's on the menu. The firm's top managers were accused of targeting children with predatory advertising. All this coming in the same week a new Happy Meal mascot was rolled out. CEO Don Thompson answered the critics.
As McDonald's, we are not, as was mentioned, predatory or out focused on marketing to kids alone. As a parent, we wouldn't do that. Not only that, but we are people. We do have values at McDonald's.
But the majority of shareholders remain focused on the bottom line, with concerns about McDonald's losing ground to its competitors in the multi-billion-dollar fast food industry.
This is a long-term investment for me. I want to see this in another 30 years and not another stack of worthless paper.
Analysts say the near-term keys to shareholder value are improving sales in Europe and possible plans in the future to return more cash to shareholders. For Nightly Business Report, I'm Hampton Pearson in Oak Brook, Illinois.
More troubles for Boeing. Federal aviation officials say more tests are needed to determine the safety of lithium-ion batteries used in aircraft systems. The National Transportation Safety Board says better tests are needed to determine overheating issues. The new recommendations stem from its investigation of a battery fire on board a grounded 787 Dreamliner in Boston back in January of last year.
There's a big change at the New York Stock Exchange. The CEO is stepping down effective immediately. Duncan Niederauer said today he's leaving his post a little earlier than expected, but he'll continue as president of parent company Intercontinental Exchange Group until August. Niederauer joined the NYSE back in 2007. He guided the exchange through the financial crisis. He also presided over the NYSE's $11 billion merger with the ICE.
Some key housing data out today. Sales of previously owned homes rose in April from the month prior. That's the first monthly gain of the year. But sales are below last year's springtime pace, and inventories are tight in many markets. Still, there are hopes that housing can pick up steam later this year. And Diana Olick has more.
Along with the April flowers, more of these sprang up in the nation's neighborhoods. Home sales rising 1.3% from March. While not a lot, it was the first monthly gain of the year.
Inventory limitation has been a holdback, but now we see some increase in the inventory. Very good news.
A lack of homes for sale has been plaguing the market and pushing prices higher at an unhealthy pace when compared to demand. Single-family housing starts did not improve much in April, and millions of potential sellers are stuck in place, owing more on their mortgages than their homes are worth.
If we weren't stuck in this position, if we weren't underwater on our current mortgage, we would be able to buy a larger home.
When we first met the Royals 2 years ago, they were trapped under their mortgage. Now, rising prices have them back above water, but they are still stuck.
We found that we've recouped what we lost over the last 8 years. We're probably about where we were at the beginning. So that's positive. But unfortunately, the homes that we were in a real position to afford a couple of years ago have also appreciated. And so they've kind of grown out of our price range.
The median home price in April was 5% higher than a year ago, according to the realtors, the smallest annual price gain in 2 years. Rising prices have brought more homeowners above water, but only a fraction of those are able to sell. So as this rather disappointing spring season comes to a close, the question is, what's next? Usually, as temperatures rise, home sales cool. But with both prices and credit easing and more homes coming on the market, we could see just the opposite. For Nightly Business Report, I'm Diana Olick in Washington.
Still ahead, $1,000 for one pill? Why are some prescription drugs so expensive? And what, if anything, can be done about it? It's been nearly half a year since recreational sales and use of marijuana have been legal in Colorado, but state officials are still grappling with the new cannabis economy, including how to collect taxes and how sellers deal with skittish banks in an all-cash business. Jane Wells has more from a cannabis convention in Denver.
And your tax on recreational is 21%?
Right around there, yeah.
Cool.
They're raking in the tax money 5 months into Colorado's great retail pot experiment. The state collected $8 million in taxes and fees through April for recreational marijuana sales.
Here we have 2 recreational safes.
Brooke Gehring used to be in residential banking. Now she runs 4 pot stores, and retail sales are outpacing medical marijuana sales.
This is also retail.
She has to keep separate her recreational and medical product and cash per state law.
Cash management is an entire individual sector of our business now.
That's because this remains an all-cash business. Entrepreneurs at Colorado's first Cannabis Summit are learning that even as the federal government said state banks can accept pot money, there's so much paperwork involved, and the risk of getting in trouble with other regulators remains so high that most banks refuse the business.
Well, you have to be creative in the banking situation.
Jennifer Murray runs a marijuana testing lab called Can Labs, and her longtime bank dropped her account.
And we just have other ways of banking.
There is a move here to create a banking cooperative for marijuana businesses, a way to bank outside of banks, but it is raising some red flags.
I would be very scared to expose our money and then for any reason be at risk for any type of laundering.
In the meantime, Gehring, like others, pays her taxes in cash. So somebody is taking a bag of cash to the state to pay taxes, and the state isn't putting that in the bank.
Absolutely.
But you can't put it in the bank.
No.
Proving that as Colorado rolls out an entire new industry, the hurdles remain high. For Nightly Business Report, Jane Wells, Denver.
Cost cutting helped Best Buy report better than expected earnings, and that's where we begin tonight's market focus. The consumer electronics retailer did, however, have weak sales that missed estimates. The company also told investors that it expects sales to decline over the next 2 quarters because of a lack of compelling new products. Now, despite that forecast, shares were up about 3.5% today to $26.22. Sears said its first quarter loss widened because of falling revenue and weak same-store sales. The retailer is in the process of closing 80 stores, and that number may increase. The company, which of course operates Kmart and its namesake Sears stores, did report revenue that topped expectations, and that sent shares up more than 4% today. 38.10 was the close there. And Dollar Tree posted better than expected first quarter earnings on an increase in sales. The company says its strong same-store sales in April have continued into May. The dollar store operator narrowed its outlook for the full year, but investors played past that one. Shares popped more than 6.5% to $53.31.
A stunning debut for JD.com today. Its shares climbed in the company's first day of trading on the NASDAQ. JD is China's second largest e-commerce company after its rival Alibaba, which is expected to go public on Wall Street later this year. Now, JD's offering raised almost $1.8 billion, with shares pricing at $19 apiece. Shares closed at $20.90. That's an increase of 10%. And quarterly earnings at Gap plunged 22%, mostly because of foreign currency issues. Same-store sales also fell for the first time in a few years, but the company still reaffirmed its full-year outlook. Gap shares fell slightly in after-hours trading. They rose slightly during the regular session to $40.86.
The FDA is coming down hard on illegal online pharmacies. The Food and Drug Administration, partnering with other federal and international agencies, took action against websites that sell what it calls potentially dangerous and unapproved prescription medicines to U.S. consumers. This week, the FDA detained or seized hundreds of packages at U.S. mail facilities containing illegal prescription drugs.
Well, those mail-order pharmacies may be the only way some people can afford their prescription medications, as the price of drugs seem to climb higher and higher. So why do brand-name drugs cost so much? And can anything be done about it? Meg Terrell gets some answers.
When it was approved in 2001, Gleevec changed the face of chronic myeloid leukemia. That cancer drug and others that followed enabled patients to live almost normal lifespans. Its price, about $30,000 a year. A decade later, Gleevec's price had tripled to $92,000. That escalation is part of a broader trend in the pharmaceutical industry, and everyone from doctors to patients to health insurers and Congress is taking notice.
Access really is a problem for a lot of patients in relation to these very costly medicines. We sometimes think, well, people have insurance, and under Obamacare, there's a lot more coverage. But what that doesn't take into account is that very often there is a very big copayment that the patient has to come up with that is often many, many hundreds or thousands of dollars.
Some doctors have started to think about price when prescribing medicines. In 2012, Memorial Sloan Kettering Cancer Center refused to prescribe the drug Zoltrap because it didn't work any better than an older medicine but cost twice as much. Last year, a group of more than 100 physicians called for lower prices on some leukemia drugs, including Gleevec. But the controversy goes beyond cancer. In March, a congressional committee asked drug maker Gilead to explain the price of its new hepatitis C drug, Sovaldi. It costs $84,000 for a 12-week course of treatment, or about $1,000 a day. Supporters point out it's a cure for hepatitis C, and its use could save the healthcare system money over the long term.
Some of the price tags that these companies have put on drugs just appear high to folks. And it's very difficult for somebody that's not a trained pharmacoeconomist to explain why a drug that perhaps costs $50,000 a year is actually cheap for society.
Researchers say there needs to be a balance between reining in drug prices and encouraging pharma companies to spend money on risky science. The drug industry says it costs more than $1 billion and takes at least a decade on average to develop a medicine. And the failure rate is high. For every one Gleevec, there are thousands of potential drugs that never make it to market. For Nightly Business Report, I'm Meg Terrell.
The drug Sovaldi, mentioned in Meg's story, has become a lightning rod in the debate over drug prices, and that's because insurance companies and federal health programs have to weigh the proven effectiveness of that hepatitis C treatment against that staggering $84,000 cost. Bertha Coombs takes a closer look now at Sovaldi and its impact on one patient's life.
Michelle Carver doesn't know how she got hepatitis C. It might have been from a blood transfusion years ago.
I was in shock when I found out I had it. And I'm in shock to find out that it actually can leave my body.
She's undergoing treatment with the controversial new Hep C drug Sovaldi, made by Gilead Sciences and J&J's Alizio.
I take the 2 pills and that's it. I haven't had one side effect.
And she now tests negative for the Hep C virus, which untreated can lead to liver failure.
I'm exercising again.
I'm glad to hear that. And no pain in your belly.
I have no pain in my belly.
There's no question the drug works.
We're talking about curing people with a 90 to 100% success rate at this point. It's a whole new ballgame.
But at a high price. The 12-week treatment with Sovaldi costs $84,000, $1,000 per pill. With the companion drug Alizio, the new cure tops $140,000, 3 times the cost of older Hep C drugs. But those drugs often have costly side effects. Sovaldi doesn't.
It might seem like sticker shock, but the truth of the matter is that you're saving money in the long term.
Well, Sovaldi isn't the first sticker shock drug. It may be the biggest. An estimated 3 million Americans are infected with the Hep C virus, and demand has been strong.
We have a large number of people that are really willing to be treated that previously resisted treatment because they were afraid of the side effects.
The drug saw more than $2 billion in sales in its first 3 months, and that has private insurance, Medicaid, and Medicare plans bracing for a steep jump in drug costs this year.
It is both a high price and a high volume, and that's what makes people very nervous about what it might mean to the cost of care and the cost of programs and to the cost of insurance.
Michelle Carver worried about Sovaldi's costs. She feels blessed her insurer covered it.
I feel so much better since I've been taking it.
As many as 3 new hepatitis C treatments are expected to come to market between now and 2016, which could bring prices down because of competition. But for now, Sovaldi has a lock on the market. Bertha Coombs, Nightly Business Report, New York.
So why are prices for some specialty drugs so high, and what, if anything, can be done about it? Joining us now with 2 different views on this subject, Lori Riley. She's Executive Vice President for Policy and Research at the Pharmaceutical Research and Manufacturers of America, PhRMA. And Dan Duren is Executive Vice President for Policy and Regulatory Affairs at America's Health Insurance Plans. Lori, let me begin with you. I mean, it's such a heartwarming story that Bertha just reported on, when somebody has a drug that can be cured permanently of a terrible disease. But how do you explain why Gilead charges $84,000 for this treatment in the United States, but charges $900 for the same medication over the same time, $900 in Egypt?
Right. Well, thanks for the question. Thanks for having me here today. I think the point that was made in your earlier piece about this medicine and the value that it creates for patients. When you think about hepatitis C, this is a condition that kills more patients in the United States than HIV/AIDS. It is the leading cause of liver cancer. Patients that have this disease often have many costly episodes of care throughout the year. We now have a treatment that provides 90 to 100% cure rate over a 12-week period of time with little to no side effects. It's really hard to argue about the value that this medicine is bringing to society. I think a lot of the reason that the focus right now is on the price of medicines is in part because our insurance system demands that patients, like the patient that we saw there, often pay a much higher percent for that medicine out of pocket compared to a lot of other health care. So
yeah,
for example,
I get what you're saying. Sorry to interrupt, but why is it $84,000 in the U.S. and $900 for the same drug in Egypt? That's a huge discrepancy.
Well, I think, one thing is clear, that healthcare in the United States is often more expensive than it is in other places. And that's true not just for prescription medicines, it's true for virtually every other form of healthcare. You have countries around the world that have much lower cost of living, much lower economic abilities for patients, and honestly a much higher epidemic for this medicine. But again, going back to the situation in the United States, I think it is important to put the cost of medicines into perspective. As a society, we're spending about 10 to 12% of all of healthcare on medicines. It's been about the same amount for the last many years, and it's projected to be about the same going forward. A lot of times the insurers want to put the spotlight on a handful of medicines and ignore the fact that about 86% of all prescriptions prescribed today are generic medicines.
Right.
And we have a system in the United States that encourages that kind of efficiency.
Let me bring Dan Durham in. Much to consider there. Lori has laid out a point of view. I'm just going to lay it out on the table for you to react to that. And obviously, no one's questioning the value of these medications, really, because obviously they have life-saving value. What people are perplexed by, Dan, is the pricing of those medicines and why in our system they are so much higher than they are in other parts of the world.
Well, that's an excellent question. I mean, we're facing a public health crisis in this country with hepatitis C. And to deal effectively with that type of crisis, stakeholders need to react responsibly. Price gouging is not acting responsibly. Charging $1,000 a pill, $84,000 for a course of treatment, is not acting responsibly. Asking for a blank check is not acting responsibly. The growth in prices that we're seeing for these specialty medicines is simply unsustainable. It's unsustainable for family budgets. It's unsustainable for small businesses that are providing health coverage to their employees. And it's unsustainable for taxpayers that are funding important programs like Medicare and Medicaid.
Are we ultimately, Dan, going to have a two-tiered healthcare system for the people who can afford the best plans are going to get these kinds of drugs, and the other people are going to be left out in the cold?
Well, that's another excellent question. Health plans do everything they can to hold down premiums. And part of that involves negotiating the best price they can for the consumers that they serve. And when you have a monopoly, as we do in this case, of a specialty medicine that has no competitors, there's no leverage to negotiate that kind of lower price. And so it becomes difficult and very challenging to ensure that patients have access to these kind of medicines.
We've run out of time on this very important discussion. Thank you so much for joining us. We really appreciate it. Lori Riley with the Pharmaceutical Research and Manufacturers of America, and Dan Durham from America's Health Insurance Plans. Thank you both very much.
And coming up, women are making more of the household spending and investment decisions, but there's something holding them back from taking on the right amount of risk. That story next.
Call it the power of the purse. More and more women all around the globe are making the money decisions in their households. A new study by the Center for Talent Innovation shows that in the U.S., women are responsible for almost 40% of all investable assets, and that number is growing. But surprisingly, only half of them rely on a financial advisor on the best ways to save and invest.
You'd think Lauren Mylan Bias has it all: a model, entrepreneur, and CEO. Now she even has a book to help others maximize their potential.
Financial well-being, my future, planning for my future, even in my modeling days, was always very, very important to me. I was the girl who was not buying the fancy shoes, the Jimmy Choos and the Louboutins.
She was gutsy enough to have started several companies from scratch, but when it came to managing her money, she was anything but a risk taker. That changed after she became a single mother of two following a divorce.
It was uncharted territory for me. While I had, been an entrepreneur, I hadn't necessarily immersed myself in all of those investing decisions.
Lauren isn't alone. A new study by the Center for Talent Innovation says women create, control, and influence more than a quarter of the world's wealth, about $20 trillion. 66% of the women surveyed say they make the investment decisions in their households.
There are certain studies that even project it out to be women eclipsing men over the next several decades.
Stacey Francis runs a wealth management firm in New York with a focus on women. She says women, like men, want a good return, but it's tougher to convince women on the value of having a financial advisor. And to many women, investments need to be something tangible, something they can use.
It's Venus and Mars, and often money really intimidates women. And so a topic that's intimidating, what do we do? Do we embrace it? No. We go shopping.
Part of the problem is confidence. Many women are less likely than men to consider themselves knowledgeable about their finances, and they fear that an advisor might force them to make risky decisions. Bias has been working with Francis. She says the key is to nurture the relationship. Trust has to be earned.
The relationship boils down to communication, right? Most women aren't going to want to get their quarterly report or their monthly report in an email with very little face time.
Another interesting conclusion from that study, confidence is less of an issue in China. Women were almost as confident as men when it comes to money issues. That's it for Nightly Business Report. I'm Susie Garrow.
I'm Tyler Matheson. We'll see you back here tomorrow.
I'm Susie Garrow with a Nightly Business Report news brief. Personal computer giant Hewlett-Packard surprised Wall Street by accidentally releasing earnings an hour early. But that didn't help investors. Revenues fell for the 11th straight quarter and the stock sold off. On Wall Street, the major averages rose thanks to good news about manufacturing in China and the U.S. and improved earnings from retailers like Best Buy and Dollar Tree. The Dow rose 10 points, the Nasdaq added 22, and the S&P was up by 4 points. Encouraging news on housing. Existing home sales rose more than 1% in April, the first monthly increase this year. And more than 100 fast food workers and union organizers were arrested after protesting for higher wages at McDonald's annual shareholders meeting. Be sure to tune in to Nightly Business Report right here on your public television station.